Hello and welcome to Feedstuffs 365 and Beef Magazine. I'm Ann Hess. Where are prices headed? What does supply and demand look like in the weeks ahead? Joining us to discuss what's ahead for the cattle market is Trey Freeman of Ever.Ag. Welcome, Trey, and thank you so much for joining us.
Hi, Ann. Thanks to have me again. Good to be here.
Before we jump into today's discussion, I'd like to remind the audience, you tuning in, you can post any questions you might have for Trey there in the chat, or if you're tuning in via social media, you can post those there in the comments. So Trey, let's kick off the discussion. I know Tyson Foods released their quarterly earnings report and beat some expectations there, I think, thanks to the chicken segment. Fill us in on what's going on there.
Yes, Packers losing up to our models up to $350 a head after last week. So box beef continues to move lower. We found a little support here this week so far into the week, but also having to pay up for fed cattle on the cash market. So they are going through some massive losses right now. But yeah, as in this quarterly earnings report, they beat expectations, so that's friendly to the market. You got to think of plant closures, and that is something that is on the market's mind, a big concern they have. So this may not take that off the table, but certainly maybe eases some minds as far as plant closures.
How about beef imports? We heard there's a 50% tariff levied on Brazil. What's going on there?
Yeah. So first off, beef imports, they're up about 17, 18% year to date based on the weekly data. A lot of this is Brazilian imports, who we import a ton of frozen 90s lean trim from. We're short on lean trim here in the States due to the sharply lower cow kill in recent years. So we're heavily reliant on them for 90s trim to mix with our fattier trim from fed cattle to produce items like hamburger meat. But starting Friday, yes, the U.S. Levied a 50% tariff on Brazil. That's going to be a shakeup and friendly to the cutout with that lesser Brazilian beef hitting the U.S. shores. As long as that tariff's in place, I expect Brazilian beef imports into the States to be drastically smaller through year end.
You mentioned that the lower cow-calf kill. What are slaughter looking like? We're still going to be seeing some reductions there.
Yeah, we've seen big reductions in recent weeks. Last week's slaughter was estimated around 534,000 head. That's the smallest non-holiday kill on record. Total slaughter year to date, it's down over 5%. Now we may see Packers ramp up kill a little more than what's been seen in recent weeks, just dependent on box beef's ability to move higher with some help from seasonal demand as Labor Day approaches. Box beef, we have seen, we saw a $4.60 hundredweight move higher in the AM box beef report this morning. So we had drifted from the 390s down and bottomed at 363, or what appears to be a bottom at 363 last week. And so we're trading about 370 in that choice now. And again, we're up $4.50 today. And we typically, this is in line with the seasonal, we typically experience a bounce leading into Labor Day before turning lower again into the fall. So as we talk about those slaughter reductions, we may see something a little more than what we've seen in recent weeks as far as what the slaughter counts been. We had two in a row that were sub 550,000 head. I mean, that is so small. And so hopefully we can get a little bit more of a kill here moving forward for at least the time being.
How about live cattle futures? Are we still going to see some volatility there?
Oh my, yes. And last week we had that huge slam lower on Thursday. That was likely a function of some end of month profit taking and just the need for a market correction. We had moved so much higher in such a short amount of time. It was due for a correction. You line that up with the end of the month and you'll see something like that. And of course, in typical cattle futures fashion, it was overdone. That October live cattle futures contract, in fact, got as low as $20 under last week's 5 area and $25 below where cash was trading in the north at that time last week.
So corn futures have also been drifting lower. What effect are we seeing on feeder cattle futures there?
It's definitely been supportive. Lower corn prices really been helpful to feeders on these pullbacks that we've seen. We've seen big corrections, and then the market trying to steady out, find some solid footing, and then it gets a little help from corn, and traders are quick to step in and buy feeders. So with December corn having approached critical support at $4, it's going to be interesting here the next few days. It's like today, we started off higher in feeder futures and live cattle futures. And then once that corn started moving lower and making new contract lows and started playing with that $4 level, we really saw buyers step into feeders. And in fact, today, live cattle and feeders, a lot of those contracts actually made new highs after being down just Thursday last week, $8.50 in one day. So a really good recovery here in cattle. And looking at cash fed trade this week, I mean, with the higher box beef prices, with the turn up in futures again, the heat's going to be on the packer again. So kind of looking into the first of this week, I believe a lot of the trade thought that we'd see steady cash at best maybe. And really, I mean, I think there's a chance at higher cash prices again this week.
A bit of a roller coaster ride over the last week, it sounds like.
Very much.
So how about dressed cattle weights? What are we seeing there?
So last week's official data, we saw steer weights up a pound, and we saw heifer weights down 3 pounds. Now they're starting to show some signs of slowing and bottoming out. Typically, we bottom out. Really, we typically bottom out about a month ago, but looks like they're starting to really find some support here and move higher. And they typically move higher until the end of the year. And I'd expect that to happen. I'd expect us to continue to see weights well over a year ago, just due to the economics of it. It makes total sense for cattle feeders to feed these animals for such long periods of time that, and they have all the leverage on the cash market. And so they're going to utilize that and continue feeding to these heavy weights.
What are your expectations for fed cattle cash this week?
Yeah, and so again, I came in this week looking at maybe a steady trade, but we got stronger box beef, maybe some with maybe a better kill, a higher kill this week, higher slaughter, just due to maybe those margins improving a little bit. So maybe we have a little room here to move higher on the fed cash cattle market. It's hard to bet on that though after trading up to 243 last week on the 5 area and 247 in the north and up to 237 in the south. I mean, it's been week after week of higher prices. So I guess you got to go with the trend, and that's higher week after week.
Are we seeing any signs of heifer retention?
The last cattle on feed report released a couple weeks ago that included a quarterly heifers on feed percentage. It came out to 38.1%. This is the second lowest behind the previous quarter's percentage of heifers on feed since April 2022. So this is suggestive of some heifer retention, but until that number is consistently under 37% at least, we won't see any meaningful rebuild. And under 35%, we'd be well underway if we can consistently see that. Now, the percentage of cows making up total slaughter through the first 29 weeks of this year is about 16.9%. That's the lowest on record going back a couple decades. So compared to last year, cow slaughter is down about 12%. Now, you have to take into account the fact that we just plain have fewer cows. So it's not entirely representative of herd that's rebuilding. But now, if you look at heifers as a percent of total slaughter through 29 weeks, it's been a higher percentage of total slaughter makeup. So every year since 2016. So that's telling that any herd rebuilding that's happening is from producers holding on to some of their older cows for another year, not so much heifer retention. But if you look at just the fed slaughter portion, so just the steers and heifers, the percentage of heifer slaughter has been lower from a year ago for 19 of these first 29 weeks of the year. Last year, that number was 15, the year before 7, the year before that, it was 3. So a bit of a trend starting to show there. Again, there are other variables at play influencing these numbers, so not entirely reliant as it pertains to measuring herd rebuild. But in general, the point I'm trying to make is that there are enough signs showing up that the herd rebuild process is beginning. The fact that there are slight and not totally reliant numbers as means of measuring the herd rebuild, it's still going to be another year before anything meaningful really likely starts to show up. And as far as this trend to continue to see these data points suggesting herd rebuild, I mean, precipitation has been widespread and timely for much of cattle country for months now. You get into some of western Nebraska, Wyoming, Utah, Arizona, still dry, but just anywhere east of their major cattle country, the big cow calf states. The latest drought maps look about as good as they have in years.
I want to remind our audience, if you have any questions for Trey, be sure to post those there in the chat or in the comments in your social media feed. Trey, I know we didn't touch on this, but we've seen any impact from New World screwworm?
So yeah, I mean, that's been a scare to the market, mainly headlines. But as far as the last month here, really, we haven't heard a whole lot. They're taking action to really slow that spread. But the fact that it had been moving northward, I mean, that is certainly a scare. And really, how the market's going to react to that, it tipped its hat. What was it, about a month ago, when it sold off hard on the news that screwworm was moving north in Mexico. But other than that, there hadn't been a whole lot of news, so that's been a good thing.
Yeah, absolutely. We touched on imports. You know, Australia's made news here on the exports. What else is on your radar?
You know, and that's one thing. Australia did open their ports to U.S. beef. They had some restrictions for years, decades, and so they did open their ports to them. Now, I think that's more of headline and not so much that it's actually going to occur that they're going to import any U.S. beef. But I'll take a headline if that boosts futures. If that gets some mojo going here, I'm all for it. But if we're going to see any imports, any exports to Australia moving forward, I'd be surprised, though.
As we wrap up our discussion here, Trey, any key takeaways you'd like to leave our audience?
Really, where we're at nowadays in futures, I mean, you look at 340 feeders, a 10-15% correction this time of year is not uncommon. And so you just put that into dollar amount. That's what, 35 to 45, $50 correction. I mean, that's huge. And so whenever we see these $8 down days in feeders like we did last week, or in fats, $8 down, in fats, that's that's really a fairly small percentage move. So expect the volatility to continue and manage risk appropriately. If there's ever a time to have some mechanism of price control, I'd say it's now.
Trey Freeman, Ever.Ag, thank you so much for joining us today and sharing your insight.
Thanks, Ann.
For you and our audience, we thank you for tuning in. For more coverage and conversation on beef industry related topics, be sure to check out the live and on-demand section of Feedstuffs 365. For Feedstuffs 365 and beef, I'm Ann Huss.